fundamental issue is that 30% of homeowners are locked in mortgage rates.
$1.5 trillion of debt.
Financial institutions in America have been failing the industry and millions of people that depend on them. Some of the firms are so large that the federal government will be forced to spend public money should something significant happen to them. Given the examples of the 2008-2009 financial crisis, when the U.S. government bailed out the most prominent financial companies, the phrase "too big to fail" is not trivial in the recent history of America's economic endeavors. Ordinary citizens know that the budget will cover any mistake by banks, hedge funds, and insurance companies. This time, an American alternative investment management company based in New York City is in trouble. As of the 2021 report, Blackstone had a whopping $12.3 billion of net income, but this year it is in a grim financial position that could lead to its demise. So in this video, we'll talk about one of the biggest financial companies, Blackstone, and its possible effects on the financial stability of America. However, before diving into the topic, consider subscribing to the channel and hitting the notification bell to stay on top of the economic news chain. One might rightly say, why bother about another investment company that's been doing badly? First, Blackstone's assets under management, AUM, are almost $1 trillion. The company manages over 12,000 real estate assets, 250 companies around the world. Thus, its collapse would send a terrible signal to investors and have a catastrophic result for the real estate industry. Second, according to the U.S. Securities and Exchange Commission report, Blackstone may face some risks, including liquidity. In 2020, our portfolio companies faced and may face in the future increased credit and liquidity risk due to volatility in financial markets, reduced revenue streams, and limited access or higher cost of financing, which may result in potential impairment of our fund's investments, the report says. This means that any economic crisis will likely affect the company's financial health, as Blackstone would be forced to sell the assets, in case it needs to cover the debt. Third, the company faces problems as we speak, and it is unclear how this will end for the financial industry. Now to the problems. At the beginning of March of the current year, Blackstone Incorporated defaulted on a €531 million bond, about $562 million backed by a portfolio of offices and stores owned by Finnish company Sponda Oy, as rising interest rates hit European property values. In a more detailed Bloomberg article, we see that the properties included two hypermarkets with two of Finland's biggest retailers, S Group and Kesko Oik, as tenants. However, 2/3 of the portfolio was made up of small suburban office properties, many appearing to date from the 1980s, with less than $10.6 million of the loan facility allocated to each of them. According to the Reuters report, bondholders refused the company's request for an extension, which led to the fall of the equity shares by 1.6% after the news about the default spread. However, Blackstone's leadership attempted to downplay the issue, saying that the debt is not a significant problem, that it only pertains to a small portion of the Sponda portfolio. But the truth is that Blackstone sold off about 16 buildings to pay down nearly half of the note, which now has an outstanding balance of €297 million. As Citigroup and Morgan Stanley underwrote the bond, which was initially secured against 63 mostly office buildings in Finland. And here comes the second legitimate question. Why does the company default on a $500 million bond if it's wealthy and successful? What if the company is not as financially healthy as we're told? And if the company fails, who will be responsible for it? Another problem Blackstone faces is its $71 billion unlisted real estate income trust. Blackstone Real Estate Income Trust, BREIT, is under pressure. After the collapse of the U.S. largest regional banks, SVB and Signature, investors demanded their funds back from Blackstone. As a result, Blackstone clients asked to pull $4.5 billion from a closely followed real estate fund in March, even as the company's executives were promoting investment opportunities in the sector that they said would rise from U.S. economic turbulence. However, Blackstone paid only $666 million due to the withdrawal cap. Since its launch in 2017, Blackstone Real Estate Income Trust has offered to invest in real estate to wealthy individuals, contributing 17% to Blackstone's earnings. The impact of BREIT's failure will likely be devastating for the institution, although it offers good profits. The rules are strict. Clients can only withdraw up to 2% of their total assets monthly and more than 5% each quarter. Since November, Blackstone has paid out over $5 billion to its investors. This time, withdrawals were the highest in Asia. The beginning of the year was also not very lucrative. Blackstone's fourth quarter distributable earnings fell 41% year on year. Generally, the commercial real estate industry, worth over $20 trillion, has faced challenges after many years of growth, which was helped by low income rates and easy credit. Due to the pandemic, occupancy rates in office and retail properties have decreased, and people are changing where they work and how they shop. Additionally, the Federal Reserve's attempts to fight inflation by raising interest rates have made it harder for the industry to get credit. The industry's problems have been worsened by recent banking stress. Most lending to commercial real estate developers and managers comes from small and mid-sized banks, which have been hit hardest by liquidity problems. This has caused concerns about limited access to credit, leading some investors to bet against commercial landlords. As a result, real estate has become the most shortened industry globally and the third most shortened in the United States, according to S&P Global. However, Blackstone's leadership continues to calm the investors and the public by arguing that the company will cope with all the problems. The banking system is not in any type of conventional crisis, Blackstone CEO Steve Schwartzman said. We have just an interim issue with interest rates being up, and we have a deposit issue caused by technology. And these are both solvable problems for the vast number of banks. If anyone, he must be satisfied with the company's performance, as he reaped a record $1.27 billion in 2022. Despite the image of stability created by assurances in mainstream media, any company must maintain a high level of trust from the general public and investors. Blackstone's reputation was under pressure 4 years ago as the UN's housing advisor accused the corporation of exploiting tenants, wreaking havoc in the communities, and helping to fuel a global housing crisis. UN rapporteur Leilani Farah and co-author Surya Deva, chairperson of the UN Working Group, in their letters to Blackstone and government officials in the Czech Republic, Denmark, Ireland, Spain, Sweden, and the US, mentioned the company's and its subsidiaries' aggressive eviction policies, which led to the shrinking pool of affordable housing in some areas. Blackstone representatives responded with claims that the UN report contained factual inaccuracies. However, it is hard to imagine where the next economic crisis hits. Current property values sinking, not only wealthy individuals are at risk of losing money, but universities as well. Believe it or not. In January, the University of California's employees and housing advocates protested the university's investment portfolio in Blackstone. While other investors fled, the U.S. invested $4 billion in Blackstone Real Estate Income Trust. Such moves may be highly questionable, considering today's market and the public's concern with financial institutions. There are some gloomy estimates for the near future of the real estate industry. Office and retail property valuations could plummet as much as 40% from peak to trough this year, as higher interest rates make it harder for investors to refinance trillions in looming debt, according to Lisa Chalette, Chief Investment Officer for Morgan Stanley Wealth Management. Thus, it would not be an exaggeration to say that one needs to be more careful with investing strategies, now as both financial and real estate industries are not in the best shape. It is unclear whether Blackstone will overcome problems. Still, if it collapses, it will be a significant hit to America's economy. And as almost always, ordinary households will bear the ultimate price. Thank you for watching. Hit the like button if you enjoyed the video, and remember to share your opinion on the subject in the comments section below.